I'm so thankful that you opened this room because it made me look at my auto loan different. Because my car, I was one payment off from paying off my car loan last year in October. And someone totaled my car while it was sitting, minding its own business in front of my mother's house.
Your car was minding its own business.
Minding its own business, not bothering anyone. And the gentleman fell asleep behind the wheel and totaled my almost paid off vehicle. I only owed like $650 some dollars. So I was sick that I had to go into another auto loan. And so now I was trying to figure out exactly how to pay it off in the fastest way possible. So I'm paying like $74 in interest. My interest rate isn't really high compared to some other people I know. Mine is like 2.59%. But just that alone, it gives me something to start with. So I do
That's
appreciate
right.
that.
So, Carla, let me ask you a question here. All right. I wanted to ask some numbers, and I'm actually going to put this on the screen. These are some of the things that, I just don't get an opportunity to talk about because the questions don't come up. All right. So we're going to put this on the screen right now, and I'm going to put on a new amortization schedule. So what we're going to ask is, we're just going to pretend, okay, that our car got totaled and we got a check from the insurance company. Okay. So approximately, just talking about, we're asking for a friend. Okay. How much could we get for our car from the insurance company? Just give me a number.
I got 14,000 for mine.
All right. So you got
So we'll take 14,000.
$14,000. Okay. So now you bought a new car, and by the time you negotiated the price on that car, how much was that new car? Just the negotiated
The
price.
cash price.
Mhm.
Oh God, let me see. I think it was like 49,000.
49,000. Okay. Now that's with no down payment, right?
Correct.
Okay. So no down payment. And the interest rate was how much?
My interest rate is 2.59%.
2.59. And is it a 60-month loan, 72-month loan, 84-month loan?
It's a 70.
72. Okay. So if we do that, the payment is right around 735.54, something like that. Close?
Well, I put down some money.
Okay, I know.
Yeah.
Okay. So if this was my loan and I had $14,000, I would not put the $14,000 down on this loan. You know what I would do with it? What do you think what I would do with this, Carl, if I had 14,000?
Put it toward the principal.
I would put it towards the principal. Watch what it does. Okay. So here's my payment. I got $635.54. Here's my cumulative principal. Okay. I got $14,000 to put towards this loan. If I do that, it knocks off almost 2 years off my 7-year loan.
Ugh.
That's why I didn't want to ask you any more questions.
That's where my frustration comes in because I learn things after the fact.
Well, that's okay. Next time would be okay. Next time would be okay. So instead of start out around $34,000 and payment number one, now you're at the same place. You could be at the same place and you could be at line 23 on your amortization schedule, almost knocking off 4 payments. Now, here's the thing. Now, watch this, right? The total amount of interest. Now, this is going to be important. The amount of interest that the bank would want is $3,958. Okay, $3,958. So if we had $49,000 and we subtract 14,000, okay, that means we're about $35,000. So if let's duplicate this tab, put it in for 35,000, okay? 35,000, same rate, okay? And here's our new payment. Okay, delete that, boom. Now our payment is $525, okay? Now, if we take a look at the amount of interest that the bank wants, it's $2,827 if we make every single payment. $2,827.36. But over here, the bank wants $3,000, almost $4,000 over here. But if I take the 49,000 and let me bring that up here, okay? The bank wants 3958.88. That's how much money they want, okay? And so now I'm going to prepay the $14,000 and save $1,931.53. So I'm going to subtract $1,931.53. Okay. That's 2,027. If I don't do anything else on this loan, I'll only pay $2,027.35. But by making a down payment, I can only get it down to $2,827. Does that make sense, everybody?
Yes, it does.
Okay. Just by making a prepayment on the higher amount, and then I start attacking it at this point, I'm going to pay even less. So, folks, it matters. This is why we're doing the masterclass, because we can do examples like this, and I can take our own sweet time, and we're not restricted by time because this is a 2-hour room.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.